Welcome to Boroughs Burbs with hosts John Engel and Roberto Cabrera. Over the next hour, you're going to learn some insider knowledge that will help you overcome and strategize in the cutthroat world of real estate. Now, here are your hosts, John and Roberto.
Welcome, everybody, to Boroughs Burbs, episode 92, Uninsurable, Florida. First, I'd like to introduce our sponsor, Grace Farms. A great big thank you to Grace Farms. You'll find them at gracefarms.org. They have an initiative called Design for Freedom. I'd like you to all go check it out at designforfreedom.org, where they talk about the $13 trillion construction industry. They talk about the opportunities that we have to reform this industry for some of the major problems, such as forced labor. So I want you to all check out designforfreedom.org. Oh, I'm going to mute that.
I got him.
Thank you. I'd like you to all check out Design for Freedom and see what you can do, Scott Hobbs, as somebody in the construction business, about making a more ethical choices in the construction industry. With that, I'd like to introduce our co-hosts. This week, Roberto Cabrera is off. So I'd like to ask for some help from Scott Hobbs, my high school friend. He's the president of Hobbs Inc., I think $200 million a year construction business, and an MBA, and a clever guy who's building great big houses in the Hamptons, New York, Connecticut, New Jersey, and all over the tri-state area. And I'd like to introduce Meredith Bach, who can probably help me out here. It was her idea for the show. She always likes to do a show on insurance. And when I talked to her about the challenges that are going on in Florida, she introduced me to her boss, Barbara Stevens. You'll
My
see
secret weapon. Yes.
Barbara Stevens is the president of Rand Insurance up here in Connecticut, a premier premium insurer. We've also got Nevin Miller in Florida, president of Blue Marlin Insurance. And we've got Sally Daley to talk to us. She's the president of Sally Daley Real Estate, recently purchased by Douglas Elliman in Vero Beach. So you run the Douglas Elliman Vero Beach market. And you've already been on our show and talked to us about the Vero Beach market. And so what I want to know is whether this insurance crisis that we're going to hear about is affecting prices in the Vero Beach market and in Florida in generally. So with that, thank you all for coming on. Who would like to start? Nevin, can you describe the problem that Florida is facing right now?
Florida as a whole, the rates have gone through the roof. And not only has that been a major issue, but the underwriting guidelines have just become so stringent. These carriers, as of today, really don't want to write new business. So you have a lot of the old, bigger players that have exited the market, and it's just becoming harder and harder.
I heard when you talk about exiting the market, I understand that we've had 14 declare insolvency in the last year, and another 14 or so have left the state. Is that about accurate?
Yeah, that's definitely accurate. I'd say even more have probably left the state. You know, and your well-known national carriers that you guys are probably all familiar with, like Chubb and Pure, at least down in my area in the Tri-County, Palm Beach, Dade, and Broward, they've stopped riding with wind. You know, your Allstates, UPCs, a lot of other larger carriers have exited Florida altogether. So it's becoming quite an issue.
And so one problem is they're going insolvent. A second reason is they're leaving the state. A third problem is that 79% of insurance fraud in the country is in Florida, and yet only 9% of the claims are in Florida. So you've had a disproportionately high number of insurance fraud problems. And I believe that the legislature just took care of that, right? They fixed that.
We'll see if they fixed it. A lot of the mandates took place March 31st. So it's going to take about a year to flush all the garbage out, per se. and pending litigation and lawsuits. So we're hoping that there's brighter times in the near future. About this time next year, it'll be profitable to be an insurance company again, which means they'll want to start writing again. And the more companies you have, the better the competitive marketplace. So that's what we're holding on to right now.
Maybe Barbara can talk a little bit about some of the companies that Rand Insurance works with, Chubb, Berkeley One, Pure, some of those. And you obviously got an ear close to that, Barbara. Can you tell us a little bit about what they're telling us?
So I think the most important thing is that rates must be determined by the insurance commissioners, and there's a process for rates. So the unfortunate fact is that the insurance companies are not going to write in states where they can't be profitable. Not just they can't be very profitable, it's that they can't be profitable at all. So the market has changed dramatically. I've been in the business for 40 years. This is the first time I've seen this kind of a cycle where we cannot get insurance at any cost at all for many of the homes that are being purchased or owned in Florida. But it's not only Florida, it's California, and there's parts of Connecticut that we're having trouble getting the proper coverage for someone. Clients are going to choose to either buy a home or not. And our mantra these days is please call us before you put money down on a home, because it is very difficult after someone's signed a contract for us to try and either get the coverage for them or get them coverage at a reasonable price.
And to elaborate and build on that a little bit, this is the first year in my entire career, I've been doing it for 16 years, where I've actually not been able to insure a home or with wind. And that's never happened.
So how is that
confirm
possible? I mean, I know that you have citizens down there. So my sister just sold in Connecticut and moved down there to Boca Raton, and she's bought a place that's on the water. So one thing I heard was it's possible that nobody will insure that house. Is that actually possible? She was a good customer, probably of Rand Insurance, and has a not insurable.
Not insurable. I'm not saying that her home is not. There are a lot of factors that come into play when you're trying to insure a home. But I agree that this is the first time in the history that I've been in insurance where we have had probably between 4 and 6 homes that we could not insure at all.
And if you don't insure it, she might not be able to get a mortgage.
That is correct, which is why our mantra these days is call us before you purchase a home, before you put money down.
Are there certain types of houses, like if you're direct waterfront, that's the most difficult, but if you're back half a mile, you're not? Or is it just whole areas and whole swaths? And is there a dollar number at which it becomes more difficult?
So I think Nevin can answer that a little bit better, but it's the age of the home, it's the quality of the construction, it's the type of roof, it's the proximity to water. I could go on and on. I don't know how much time you want to spend on that, but on why or how difficult it is to write. And Citizens does write in Florida, but they only write to a maximum replacement value. Nevin, correct me if I'm wrong, but maybe 600,000.
Right.
We
have plenty of people rejected by Citizens.
Yeah, it's 6. You can get you have to insure your house for $699 and below. So that's the dwelling value. Unless you're in Dade or Monroe County, which is Miami or the Keys, then they'll go up to $1 million, as long as you have full opening protection, whether it's shutters or impact glass. And the main issue, to answer your question, Scott, is the age of the home and the age of the roof. Is the biggest thing. So if you have, for your clients that are building new homes, new construction, it doesn't matter where it is, we'll have plenty of markets for you. But if it's outside of new or newer construction, and it's a nightmare. So our carriers up until 2 years ago, as long as you had a tile roof that was under 50 years old, you could get insurance. Now, a lot of the carriers only want a tile roof if it's less than 5 years old or 15 or 20. And then outside of that window, then you're stuck going to Lloyd's markets and surplus markets that I'm sure Barbara and Meredith know a lot about. And then you're getting, some of our clientele in like Palm Beach Island, they're seeing premiums around the $150,000 range. So even if you can get insurance, that's going to scare a lot of people off. I don't care how wealthy they are. That kills their ratios.
And it kills
Sally.
their property value.
Yeah.
Yes,
Sally, he just said $100,000. Your clients, are you seeing that $100,000 of property insurance premium is affecting prices, blowing up your deals,
Yeah.
or blowing up their ability to get mortgages?
Well, to Barbara's point, the way we practice is always you understand the cost of ownership before you even contemplate an offer, right? Because you either maybe don't pursue that house or you pursue it differently. I'll still go for it, but I'm going to pay X, not Y. Those that are foolish enough not to do that due dil and just go tie it up and we'll figure it out, it's blowing up deals. It's literally the elephant in the living room. It's what is the age of the roof? And it's 15 years or younger. Okay. If not, we're literally seeing sellers. I coach my sellers all the time. We bring it to market and saying new roof is going to be included. The minute you get the person under contract, you start ordering the roof and you get that done. And if it's not done, you give them a credit, but at least you can bring it to market with something that somebody that wants to either pay cash and pull a mortgage thereafter or get a mortgage can get a mortgage on. Otherwise, not only are you reducing your buyer pool, you're reducing it to cash only, and it's a huge rock on your value. It is literally, in 21 years of practice, I've never seen anything like it. It is the elephant in the living room that is driving sellers to decide to sell. What may be our supply problem resolution? The inability to get insurance, but good luck seeing what you're going to be. You have to find somebody to buy it. And buyers deciding which house to buy or not to buy, period. It is, I've never seen anything like it.
I'd like to add something to this because we keep talking about homes, but the problem is going to be equally horrific for condominiums. And condominium HOAs are going to go up so much. A good renewal for a condominium is 100% over last year. And a bad renewal could be up to 300% more, which means, you know, people who went down to Florida to buy and expected to have a somewhat understanding of their expenses are going to be hit pretty hard. So if it's a secondary home, people may choose not to hold on to those any longer. So it is going to affect the real estate market quite dramatically, not just in Florida, but other areas of the country as well.
Can you elaborate on other areas of the country? I'm sitting
Well,
here well
We're
above
seeing it in
sea
California,
level.
right? In
California
Colorado.
is almost uninsurable as well.
Yeah.
Anywhere wildfire exists is, you know, becoming more and more problematic. Beautiful roofs are going to be out of the, I mean, the quality of the roof is so important. People love how certain roofs look, but they're just not going to be insurable because of the wildfire problems in parts of the country.
But you know, to elaborate that, especially with Florida, it's not a natural disaster type thing here. It's because it's so litigious and everybody's looking for a free handout. It's worse than any natural disaster you could possibly imagine. So ours is self-inflicted, and hopefully that means it's fixable. So hopefully this time next year, it's going to be a lot better, but you know, we'll see.
Right. I mean, they attempted last fall, right, Nevin? I mean, that legislation was passed, but we're not seeing it in the marketplace yet because it hasn't just took effect. Would you say the 31st of March?
Yes.
Yeah.
Right.
Yeah. So we're not seeing any results of it now.
So the cycle will happen. We just don't know how long it's going
Right.
to take and what kinds of things are going to come into play for the cycle to start to change. We have not seen the worst of it. We are still seeing, I think we're in the middle of the problem. We're not even close to the end of this problem.
I can speak personally. I do have two friends I went to college with. They're attorneys on the West Coast, and they make their livelihood basically litigating against insurance companies. And after March 31st, their well completely dried up, and now they're looking for something else to do. So, you know,
Let's talk about why that is.
That's good for us.
Let's talk about let's talk about the fraud and why that is. So after doing some reading, I found that 79% of all fraud was happening in Florida for two reasons, mainly over roofs. And people would go door to door, like your friends, and they would say, sign over your rights, and we'll give you a new roof. And they would promise a new roof, and then they would make the claim against the insurance company. Insurance company would say, you don't need a new roof. There's no problem with that roof, but it would be too expensive to settle with everybody who is going door to door. I understand that the legislation now prevented people from going and having homeowners sign over that right. Is that the major reform that just occurred?
So there was major assignment of benefits reform, which is going to help dramatically. And then the one-way attorney's fees, which you've probably read about as well, which that basically means that if you successfully file a lawsuit against an insurance company, now the insurance company has to pick up both sides of the legal fees, win or lose. So what's keeping an attorney away from filing a lawsuit against an insurance company when they know they're going to get paid whether they win or lose? So it's great for the attorney because they're getting paid, but the homeowner is the one that could be left out because they're not going to get paid if they don't win.
So those two reforms have taken place by the legislature, and that will contribute, we hope, toward insurance companies not leaving the state. But the second thing that I think Barbara mentioned is, or maybe you mentioned, is they have to be allowed to make money. And therefore, the insurance regulators have got to allow them to charge a market rate for insurance. Now, I understand that there were 2 statewide assessments last year. And I also understand that there's a asterisk at the bottom of a lot of insurance premium contracts that say, in the event of a natural disaster somewhere in the state of Florida, we have the right to increase your premium by an unlimited amount. Am I getting that right? So if I think I have a $10,000, $20,000, $50,000 premium, but it could be $100,000 if Florida experiences a great number or a great intensity of natural disasters. Am I getting that right?
I would have to refer to Nevin because I'm not aware of that for our carriers that we're doing business with in Florida.
No, I think what you mean, so Citizens has been overwhelmed with new business because they still have the old liberal guidelines on roofs and everything else. So they're taking on a ton of business. And what they have in fine print on the bottom of the application is that they're allowed to do a 45% loss assessment based on your premium size in the event that they have catastrophic losses or a large natural disaster. So if you're paying $10,000 or $30,000, let's say $30,000, and Citizens decides to do an assessment, you're going to have to come up with $12,500, whatever 45% of that $30,000 is what you're going to be assessed, and you have to pay it or you're going to go to collections.
And my area of the country, let's say this is in Palm Beach. Even if we don't have a hurricane in Palm Beach, but they have one in Sanibel, Citizens may levy that statewide.
Correct.
And it's and my exposure is limited to 45%, 145% of my premium, of my current premium.
Just the assessment can be up to 45% of your premium.
And there were 2 assessments last year. Is that true? Didn't they get 2% last year?
Correct. And then what a lot of people don't understand is if that 45% doesn't cover it, then the state has the right to assess all homeowners policies, regardless of carrier. If that doesn't cover it, then they have the right to assess any type or property or policy line, auto insurance, umbrella, whatever you may have, they can assess that as the third step. So it can trickle down even further than just your Citizens policy.
One of the major problems is that the insurance companies are not allowed to charge a proper rate. If Citizens or any other carrier could charge a proper rate, these problems would not occur, because the whole concept of insurance is to spread the risk. And if everybody pays, things can sort of work the way that they're supposed to. But the concept of being able to charge rate is very difficult.
Why can't they charge? What is the rate dependent on? If the house, let's say my sister buys a $5 million house down there, they are limited in how much they can raise it on her, even though she's the new owner? Or is it subject to an appraisal? Or is it subject to what she paid?
All of those things. Well, not so much what she paid. It's the replacement value of the home, but there's so many factors that come into play. Age of roof, and then you can have like a home security system or a automatic water shutoff. So there are a lot of factors that come into play, but the rates have to be determined and have to be approved by the insurance for the state. So even though it does seem like they raise their rates a lot, they do have the right to do that in many areas, but the base rate has to be fair and responsible to start with. So if it's not fair and responsible to start, even if they raise it, and it's very tough on our consumers, it's happening right here. There was just a note in the chat. It's happening in Connecticut and it's happening in New York. It's not only Florida. Florida is taking a huge hit because of unavailability, which is different than just very expensive. It doesn't make our clients feel any better, but at least we can provide them a product at a cost. Not being able to provide a product or having the concerns about being able to afford X amount of dollars of insurance today and then have it raised 50, 60% the next time. That's a little daunting for someone who's on and, owns a home.
If I can make one comment, to some degree, we want to have our cake and we want to eat it too, right? I mean, everyone's been super happy to have 40 and 50% appreciation. And when there are commensurate increases in the cost of your property taxes in Indian River County, we use our assessed value as a basis by which we're taxed. So if that number goes up, so too does your property tax, with a cap if you have a homestead. And same thing with insurance, right? So to some degree, we as consumers want it all. We want to have the appreciation, but we want to keep the cost of the ownership where it was.
I think the problem is that the only time you realize the cost of appreciation is if you sell. And the unfortunate—
Correct. It's a paper gain. Yes.
It's a paper gain. So when people are trying to live in their home or purchase a home or move to a condominium, and we can have two condominiums right next to each other, and one will be rated in one way and another will be rated in the other. And that shows in the market value or the pricing of the sale, because one has updated everything and the other condominium association has not. So all of these things are coming into play, which is what's our job, is to educate the consumer of what it's going to cost if they choose certain locations, certain homes, certain condos. The tough part is, as we spoke, and I appreciate you, Sally, because a lot of real estate agents are not explaining how difficult it is to get the insurance. Many of our clients are finding out after, and it was never mentioned in a lot of the showings, which is very, very difficult.
We were
Barbara, we
recently,
even talk about it when we're talking about what is my home worth. I mean, I've got clients that are in an old frame house from 1987 with an old shake roof, and it's a fabulous lot, which is why it's an old house. Their insurance is $65,000. And I said, you need to understand the impediment and the rock that is on your value when you go to strategize about how to price the house.
Absolutely, 100%. Which is really unfortunate, because a lot of those gains that have been made in the actual value of their homes has now gone backwards due to the problems with the insurance.
Right.
we were recently speaking at a staff meeting for a real estate agency in New Canaan the other day, and it was a great conversation with a lot of the agents in the room, and they basically concluded and were saying out loud, so we need to talk to our clients sooner than later. And that's really starting to become the habit of the realtors now. They're calling us when they're thinking about bidding, have a client thinking about bidding.
I mean, I'll say from the contractor perspective, I was kind of appalled at what the cost came back, the replacement and the insurance increase on my own house. And then you do the numbers backwards and you go, you're right. I mean, the cost of construction has gone way up. And I'm sure in spots like Florida, where you have to actually meet much higher standards for wind loads and for water penetrations and everything else. I mean, we all think back to like the early 90s when I guess it was Andrew came through and basically wiped out Florida. And now we've had, much more significant storms, and sand gets blown up under the beaches and some things get water through and people lose a couple windows and some tiles. But the loss is just so much less than in the past. And that's due to more expensive construction.
So
Barbara and Nevin, how are you counseling your clients? Hopefully this is a year. Barbara, you might be right, it might be longer. I mean, let's say you're me and you're counseling purchasers, do you say self-insure if you can until we start to see reform in the market and more people jump in? I mean, you have to have a certain constitution and resources to do that. What are you counseling your clients to do until this gets any level of improvement?
So if we have the opportunity to speak to someone prior to purchasing the home, then we can give them the options and what's available and the costs. It's not really up to us to determine what someone should take. It's to give them the education about what's happening and why, and the concept of market value versus replacement value, because we have some homes that might sell for $1 million, but the replacement value, because it's an older home, brick, whatever, it might be $2 million. So we spend a lot of our time doing that. What's the most difficult now is trying to explain to someone that their wind coverage, that we can't even get it. And if we can get it, it's $100,000. So then they have to determine, what do you do? Do you renegotiate the cost of the house? And some of our clients are not going to be able to afford that. So they don't have a choice other than to self-insure or sell. And we all know what happens when you have to sell a home under a little bit of duress.
Let's talk about that stick house, Sally. With the 60,000, you said, I think it was $60,000 was the premium. 65. What did so I just want to use this as a case study. What was the premium in the good old days, pre-COVID?
It started off, we acquired it, and I make it sound like it was my money. I helped them acquire it in 2011. And the policy started off at $11,000, and it was relatively stable until around 18 or 19. And then it went up to about 20, 25. And then it went from 35. And then in 1 year, it went from 35 to 65.
And what is roughly the value of that house when they bought it versus what it is now?
Well, guess what? The value is not what it was because of the cost of the insurance. They acquired it for 1.1 million and they brought it to market thinking they could get it for 3.7. And I said, you need to understand that's a huge impediment on your value. You're probably now 2.7. So literally, by rights, they should have been 3.7, but the cost of ownership probably takes it under 3.
If I buy that house for 2.7 now, I'm taking the risk of $65,000 of insurance that could go higher.
Correct.
And I'm also going to pay property taxes on that house of roughly 2%.
About a 1.6.
So is that what, $40,000?
Right. And if you're not homesteaded, it could go up with the levels of the market. If you're homesteaded, there's a cap on what your assessment can do to 3%. Yep. So
And John, if you have bad credit or anything in
Wait
your
a minute.
history,
Wait, this
that
is me.
can change everything.
Yes.
Well,
Yes.
Wait, what does that mean? It's gonna affect what if I have bad credit?
So let's call it an insurance score versus bad credit. So, and I think it's really important because that's another thing we spend a lot of time talking about. An insurance score takes a lot of things into consideration. So if somebody does have bad credit or has had a lot of small losses or some large losses, any kind of a liability suit against them, they didn't pay their premiums on time, we tell our clients, we understand you're frustrated and upset about the increase, but please pay your bill and pay it on time. If you want us to look at something after you do that, we'd be happy to, because late payments are a huge black eye on people's insurance score. Not cancellations, just late payments.
So
And that
John,
can change
John, basically what she's saying is if I do a quote and it's $10,000, you say, okay, let's do it. Run my insurance score. I run it. You have a bad insurance score, which in layman's terms is credit. Now your premium's 17,000. So that's another factor that you have to take in account for when you already have to worry about the roof, the age of construction, how old your pipes are, this, that, and the other. You still have this X factor out there.
So, so I'm gonna go buy this house for 2.7. I'm in for a 60 something,
Congratulations.
60 something in property insurance and another 40 in taxes. So I know that I'm spending $9,000 a month, and that's going to afford my affordability on my mortgage. So not only have mortgage rates gone up and now I can afford less of a house, but these two factors are also going to impact negatively my affordability. So Sally, either do you want to tell me what are customers doing? Are they shopping for a less expensive house? Are they looking to the rental market? And Nevin, I want you to tell me whether some of them are saying, well, can I insure less of it, or can I go to Citizens? I mean, what are people doing when they're hit with this affordability problem?
I'll go first and then Nevin, I'll let you take it. Depending on the client, some of them are self-insuring and they're saying, I'm just going to wait until things sort out, but you have to have a certain level of resources and a constitution to do that. Some are saying, I'm going to pay cash and I'm only going to take homeowners. I'm going to drop the wind because I'm looking at things like my base flood elevation and where the floodplains are and past history, and that's a risk I'm willing to take. Others are taking a pass on the house and they're shopping for roof first and house second. It depends on the buyer and their level of acceptance for risk.
So if you could do like a little cost benefit analysis, I mean, what does a new roof cost in Vero Beach on a 4,000 square foot house?
It depends on the square footage. That's not the right word. The linear footage, you know, the total mass of your roof. It depends on the material. I've seen wide houses be $120,000 to $150,000. And again, many HOAs mandate materials. You may not use asphalt shingle. It must be concrete or standing seam. So, I mean, it depends on where you are and it depends on, you know, the contours of the house.
But if you, I mean, so, and I fully realize, and again, clients try this on me all the time, that there is no standard answer for this, but if you,
80 to 120.
80 to 120. Okay. And if you did that, and if you don't do that, you literally can't get insurance.
Correct.
Or if you could, you're going to be paying $20,000, $30,000, $40,000 a year more.
Correct.
Okay.
At least.
So Scott, therein lies the problem. You get an estimate for $100,000 roof, and then someone knocks on your door and says, hey, we had a hailstorm here 2 months ago. Let's call your insurance company and bully them and try to get a new roof. What do you think the average Joe is going to say? I mean, it's a major ethical issue. Me being in the business, I would tell the guy to beat it. But if you're faced with $100,000 roof to get your premium down 20 grand and someone's knocking on your door saying, hey, I can get it to you for your deductible, therein lies the problem. And it's so litigious in Florida. It's disgusting. There's more attorneys and alligators, whatever joke you want to have. It's just the wild, wild west down here. So it's a major problem.
Well, when you have an entrenched vested interest, special interest group, and that is very concentrated, and then you have all the rest of the people who, you know, nobody wakes up every day saying, boy, I'm going to go out there and solve the homeowner insurance issue. It's not really surprising they end up being able to try to pull this off.
Well, I have a question for Sally and John, because with all these issues going on, it still seems like everybody's moving down here. And I don't know if it's maybe creating more opportunity with cash buyers and wealthy buyers, or what it is, or maybe everybody still wants to move here. I don't know, but it doesn't seem to have slowed down that much. Maybe I'm wrong.
For us, Nevin, we've always had, ever since the pandemic, we've had a bifurcated market. Properties that are move-in ready, and now that includes roof, are being very well received, and we have way more buyers than we have supply because we're a low density county. So we've got much less housing stock than other parts of Florida. Those that have old roofs are now saying, if we want to sell, we've got to put the roof on. So it's not really affecting us. On our barrier island, 80% of our buyers are cash. So it isn't really affecting us, but it's affecting which house they choose. And so a smart seller, even if their roof is 10 years old, they go, it's leak free. We're like, put it on, otherwise you're going to reduce your buyer pool so dramatically. You're going to be shocked at how much longer it takes and the hit that you're going to take.
Gotcha.
So ours is a function of scarcity being on our side.
All right, so John's always very good about asking this. So with this inefficiency in the market, where's the opportunity?
Is that for me, Scott?
Who's ever got this, how do you end
The
up taking?
opportunity is someone that's willing to take a house with an old roof and can pay cash. That's the opportunity, because you're going to have a smaller buyer pool and you're going to have a higher cost of ownership. So you've got two rocks on your value to go in and go for the jugular and maybe get a good buy.
Especially with a cash strapped seller.
And if you have a
Yeah.
seller that doesn't understand, we often say it's a cash preservation play for everybody, right? A roof is not a sexy spend. This is a classic example happening right now. Older owner moved to assisted living. We're painting all of the goopy paint before we put it on the market. We're marketing it as having a new roof. We're not going to commence with that contract until she gets a contract, and it's contingency free. The buyer doesn't have to take their cash. They can use their cash to do reno. She doesn't have to come up with money. It simply is paid for at the closing table. All good for everybody. But it allows her to market the house with a new roof to the biggest buyer pool possible.
Well, and that's a great way of doing it. And that's one of the issues inside of the whole renovation world is trying to get the financing a purchase is so much easier than financing renovations.
Correct.
And so doing that at that exchange allows for the much cheaper money again.
Right. And then they show the lender, if there's a lender involved, we show them the contract with the roofer. They're all good.
Mm-hmm. And the insurance company is fine with that so long as the roof is done by the time the transaction.
Prior to close of sale and everything's closed out. Yep, 100%. So you just need to understand that flow. So you build in enough time to make sure it all can happen expeditiously so the buyer can get clear to close on their mortgage.
I think it's important to note that there's a lot of other things besides the roof, but you definitely need the roof. But, flood also happens in Florida, wind-driven rain, et cetera. So we're spending a lot of time discussing today wind, but flood is another problem. And the auto rates in Florida, Nevin, you probably know this way better than I do, but most of our clients are getting a 50 to 60% increase in their auto rate in Florida.
It's all going up. And to answer John's question, how do you counsel somebody? It's all, I don't want to say it's funny because it's not, but when somebody from up north buys a house down here and they ask me for a quote, they almost fall out of their chair when they get it because, their house up north might be insured for a couple $1 million and the house they're buying down here is half the replacement cost, but it's triple the premium. So you just have to advise them that that's just the way it is down here. And the further south you go, the more expensive it is. So selling point to Vero, but it's a tough ball game.
So John Fusick asks, why would I pay $50,000 annually to insure for $699? Did we misunderstand the $699? That's the standard.
Yes, I think so, because we're talking about $699 is the maximum that Citizens will write. So the $50,000 is not a Citizens product for the most part.
If I want to buy,
replacement value is much higher on that one.
If I want to buy Sally's $2.7 million stick built with the old roof, she's advising them to put a new $120,000 roof on that. Maybe they'll recover some of that difference that you said that was a potentially 3.7 house that now, because of insurance crisis and interest rates, has come down to maybe 2.7. So if they make the investment, put the $120,000 into the roof, might that $65,000 premium come down a little bit?
Oh,
Yeah.
it absolutely should. I don't know to what number. That's Barbara and Nevin, but it's also a bigger buyer pool to sell to and shorter time on market. So it's saving time as well.
So I buy that house for 2.7, and I hope to that it's going to go down a little bit. What are my options with respect to Citizens? Citizens only insures $699,000 of my $2.7 million house.
No,
You
they
can't-
won't
no,
insure it
no.
at all.
They won't insure you at all.
Okay,
The
and I
maximum
have
they
to
will
insure
write,
it to get a
100%.
mortgage. I have to insure the
Yeah,
amount of
you
my
have to-
mortgage.
Right, you have
Correct.
to, you have to
No?
insure it to 100% replacement value.
Mhm.
Okay,
So we have to, every company has their own valuation software where we go onto the county site. We look at all the square footage features, go to Zillow, look at the finishings of the house, we plug it in, and it tells us what they think it would cost to rebuild that house in the event of a total loss. So that's the minimum number that we have to go by. So a lot of people say, well, I only have $200,000 left of my mortgage. I want to insure it for that amount. That's not the case, because we have to make sure if that house burns down or blows down, you're going to get a new house. Because if you don't get a new house and you insured it for $200,000, your mortgage amount, their memory is real short. And they'll say, wait a second, you're my insurance agent. You told me I could insure it for $200,000. That only buys me a roof these days. So then you're getting sued for not insuring the house to the proper value. So you can't underinsure strategically to get a better product is the problem. Not really the problem, but that's just the way it is.
Can't believe that your clients have short memories on that.
You know how it is. Change orders, right?
How does, and how is the whole multifamily and condo and how's that market all been affected? What's happening on the prices there due to this?
Those are all skyrocketing too. I mean, like, I think, who was it, Barbara said earlier, the condo buildings, what happened down in Sunny Isles didn't help at all. So now with these reserves that they're supposed to keep and all the carriers backing out, I mean, like Barbara said, $100,000 rate increase, 100% rate increase is a good rate increase.
Is a good one.
So if you're a large condo building down in Miami and you are paying $1 million a year in property insurance and your renewal comes back at 2 million, you almost have to thank them for even renewing it, period. So to Barbara's point, now your condo association dues have tripled to pay for the premiums, and now your retirement in a low cost environment is out the window, right? Because of your HOA dues.
And are you seeing that reflected in the prices of the condos, or at this point it's still a hot market, there's scarcity, so it maybe not?
I don't, honestly, I'm not a realtor, but it hasn't, I don't think the insurance has been the reason to really slow down the market. Sally can speak more on this. It's more of like the sellers still think they can get high and the buyers think now they can get low, and they're kind of stuck in between. Insurance is an issue, but it's not killing the market yet. I don't think it's slowed it down because of just insurance.
Correct. There's still not enough supply. But I tell you, if enough people say, Uncle, I'm selling, and they bring product to market, I mean, literally, that could be one of the dynamics that brings more inventory to market statewide. But who's going to buy the houses when they find out the cost of the insurance? The only way that's going to happen, and the only way the market will adjust, is price, right? Price mitigates all negatives.
let's
It's
talk
a-
about price. I've got I happen to have Indian River County right up here on the screen. That's where Vero Beach is. It looks to me like you've had 14 sales in May this year, over 1,000,001 versus 1 last year. I mean, it looks like the market is pretty strong.
I might look at that differently, but
ahead.
Only to say that the people with the over the million might have sold for some of the reasons that we're discussing, and you don't know if they started at thinking it was going to be a $3 million house and ended up selling it for $1.4 million. I don't know that that's the case, but I can't imagine that the insurance and the litigious society, which is, really evident in Florida, is not causing some of these problems. But I could be completely wrong.
It's going to start to, Barbara. It has to.
It has to.
It has to. I'm not sure. Right now, we have not enough supply for the demand. But it literally could be, everyone keeps saying, how are we going to solve our supply problem if everybody's locked into their cheap mortgages? Well, if your mortgage is cheap, but your homeowners insurance and your property taxes are sky high, maybe those are the drivers. So this could be one of the material changes that in turn brings more product to market, and the prices are going to have to be reflected as a result, because there'll be more supply.
When I look at the lines for new signed contract, which is the black line for each of these counties, it's more or less constant with where it was a year ago. In
That's correct.
every one of these counties, we're seeing the level of new contracts is equal to where it was a year ago, even though inventory is even lower in every case than it was.
It's true,
a
but
year
I
ago.
think to Barbara's point, over the next 12 months, we may start, I think the rates and the shock and awe of everybody getting their premium, their invitation to pay, 60% more. I think that's a leading indicator. And I think what we're looking at is lagging. I think the time to watch is this next 12 months. And if it's going to start to affect, I think we're going to start to see it over the next 12 months in terms of people deciding to put their homes on the market.
So you heard it here first, folks. Breaking news, Sally Daley predicts prices coming down in Florida. That you said, I think at the top of the show, that we're at the beginning of this crisis, not the end, even though the legislature's made some changes and people are talking about this and giving it more visibility. We're at the beginning of this crisis, and you predict prices will come down.
I think there's a risk of it. I'm not saying it's a guarantee. We still have not enough supply for our demand, but it certainly is something that could cause prices to come down in the face of extreme demand and not enough supply, because it could bring more supply to market. And if you bring more supply to market, it's going to affect pricing. I think.
What about the rental market? How has that been handling things? Is it getting busier?
Well, there's been tremendous inflation in the rental market as well. And part of that is what's going to happen to all the people that thought they wanted to buy investment properties, and then their cap rates go down the tubes because the insurance on those houses as an investor. I think Nevin and Barbara, you speak to this, as I understand it, is more expensive if you're an investor. I mean, that could be another source of supply coming to market as people go, this isn't cash flowing the way I thought it was going to.
Now, Henry, you said you're moving to Florida. I don't know if you can unmute yourself, but I'd like to understand whether, as a typical buyer down there, what kind of choices do you have when you're going down there? Are you saying, okay, this is affecting my decision on where I'll look, the age of the house I'll look at, the roof I'll look at, maybe I should rent, maybe I'll drive a harder bargain. Henry, are you still with us? Can you unmute?
John, can I interrupt 1 second?
Sure, go ahead.
I previously told you I have to run now.
Uh-huh.
I have to go pick my kids up from summer camp. It's summertime. So I apologize. I want to thank you for inviting me on your podcast and thank Matthias for linking us up. But I hope you guys have a great rest of your day.
How do we find you in the future? Do we go to bluemarlininsurance.com?
Yeah, go to bluemarlinins.com. INS stands for insurance. We have offices throughout the state of Florida, so we have a good finger on the pulse with the entire market. And if anybody listening or anybody that's on this podcast has any general questions, feel free to email me or reach out through the website.
Thank you. Thanks, Nevin.
All right, guys, have a good one.
You too. Go ahead, Scott.
No, back to Henry, I think, right? We were asking on moving to Florida.
I think, well, yes. I mean, my sister just moved down there and she didn't have the choice. She was moving down there because that's where the job was. So this wasn't, I think I'll move to a sunnier climate for retirement. A lot of people are moving down there because that's where the job has moved. A lot of financial industry has moved down there. And with that, the New Canaan and Greenwich residents have moved down there with him. So I'm kind of shocked, Barbara Stevens, shocked that after having such a tremendous relationship with Chubb and Pure in Cincinnati and the insurance company that I've loved and worked with and developed a relationship with for so many years, that they won't write for me down in Florida.
Well, each of the insurance companies is starting to build out a separate division for excess insurance, but it's going to be expensive and it's painful. And look, I have a couple of properties in Florida. My daughter just bought a small house. Thankfully, it fit into the windstorm through Citizens. But she was certainly shocked at the price because, you know, when you change hands, all kinds of things get sort of thrown out the window, and you get your rates, and she's young and all of those things. And she was really shocked. I mean, it's a small home and her insurance is over $12,000. It's small. And it's in Jupiter Farms and it's cute and all those things. But and another personal thing is my son wanted to buy a 3 family property, and he took the information from the previous previous owner and thought his insurance would be inexpensive. However, he didn't pay attention to the fact that she lived there. So it was rated completely differently. So when he finally got the actual quote from my office, he was like, there's no way. And why is it so expensive? And they decided not to purchase the property because the insurance costs were just too high from an investment standpoint.
Henry's back with us. Henry, how is what you've learned today affecting your thinking about moving to Vero Beach?
Well, it's funny because I sort of feel like an idiot because I learned a lot. I wish I knew back then, but I didn't know back then. It says I'm a cash buyer. So, you know, I ended up buying the house and then said, okay, I need insurance. And then I learned the hard way. So naturally, I came running back to my insurer up here, which is Rand and Chubb, and said, okay, what can you do for me? And they said, nothing. So I was at the mercy, and I thought I was going to be with.
I hope we said it nicely.
No, you did. You did. I don't think I responded so nicely, but you did.
I don't blame you.
Yeah. And, but the whole thing has been mine. You know, it starts from the beginning. I bid on 4 houses, lost every single one of them. I bought the house I did sight unseen. My wife has never stepped foot in this house. She's never even been to Vero Beach. So how crazy is that? But, and by the way, the house I bought, I learned a lot about stick versus cement block, whatever. The house is a cement block, and I have shutters, accordion shutters, you know, so it's like a tank sort of, except I have an asphalt roof. And I thought, you know, in a million years, I'd never get insurance. That's what I was hearing, with an asphalt roof. So I got a price estimate for a roof, which was $68,000. I thought that was ridiculous. I'm listening to this conversation and it sounds like a bargain, but you know, it's a pretty small house, but you know, I did find an insurer. I am paying $11,000 for the insurance for the house, which is the same amount of money I pay Chubb for everything I have up here: cars, house, umbrella, everything. But I got it. And although I think I have it, you know, Barbara would have a funny response to this because I don't read contracts well. I think my deductible, there's something about if it's a named storm versus I'm not sure my house is actually insured, or at least the first 100,000 probably isn't insured.
It's probably a 5% wind deductible or something, but
yeah, well, I always
than...
go. Yeah, you don't know me as a client, but I always go for the highest deductible I can get away with because that's my attitude towards insurance. But you know, I got it, and so I'm sort of happily ensconced in the house now. But you know, I know that I have to put a new roof on it.
Would Henry have had to buy more insurance if he had a mortgage?
The concept of replacement value should be the same whether you have a mortgage or not.
Okay.
There's a formula for replacement value. The difference is if he had a mortgage, he would have had to purchase all of the coverage.
Right.
Okay.
If
you don't have a mortgage, then you can self-insure.
Yeah, in a weird way, learning experience, I learned that the hard way because I didn't have a mortgage. I didn't learn about the insurance until later in the process. But you know, I'm happy. I'm not. Look,
there's a lot of reasons to live in Florida. You know,
yeah,
you have to take some of the good with the bad.
Yeah, I'm. You know, as I said, I'm on the island. I'm on Treasure Cove. I'm a half a block from the beach. I learned a lot about flood zones too. I mean, it really depends on your neighborhood. Which side of the island are you on? If you're on the riverside, you're actually worse off than the ocean side. And I said, wow, that's crazy. I would have thought the ocean side, and it's not. It's not the way it works.
So this is our final minute. And I just want to, how do I reach you, Barbara Stevens? Do I go to randinsurance.com?
Perfect.
And
You'll
how do
find
I
me there.
reach Sally Daley if I want to buy that $2.7 million stick built house on that fabulous piece of land down
The
from
Daily
3.7?
Group, thedailygroup.com. And John, I could make that happen.
Thedailygroup.com, and you can sell me that stick built house for $1 million
can.
discount.
Sure can.
Okay, and you can help me get it insured,
Little Barracuda could get that done for you.
and I get a new roof.
Yeah, maybe a contributory portion. Yeah.
Okay, thank you, everybody. This has been a great show, and
Yes, thank you. Appreciate it.
and thank you, Scott Hobbs. What did you learn today, Scott, in the last 15 seconds?
Well, it's great that it's possible to get it, and just make sure you know the rules and understand the game. Otherwise, you're at a big disadvantage.
Or go down to Florida and start building roofs.
Yeah.
There's an opportunity.
Wow.
All right,
There's your
thank you,
opportunity.
everybody. Boroughs and Burbs. See you next week.
Thank you.
Wow.
All clear. Great job today, everyone.
Thank you.
Have a great week.
You too. Thank you.